What's going on, guys? This is Chandler Smith, and in today's video, I'm gonna break down real estate investing simply so that you can understand the entire process and know whether it's something that you personally should invest in. So with all of that being said, let's jump into it. All right, guys, if you're new to the channel, just remember to hit the like button, subscribe to the channel, and hit the little bell so that you can catch my future videos where my goal is to help you to build a huge passive income through investing in real estate. And just so you know, I currently own 99 units of rental real estate, and I truly believe there is no better place to invest than in real estate. And the biggest reason for this is that real estate pays you in 4 different ways. And so in this video, I'm gonna break down the 4 different ways that you make money investing in real estate, but I'm also gonna show you how and why you should invest in real estate. So right off the bat, you need to understand that if you have cash in the bank, or cash in your pocket, every single day, that cash is going down in value. Now, this is called inflation, and I'm not gonna dive into inflation, but essentially, it means that your dollar is becoming worth less and less every single year. Now, this carries over into something that is called appreciation. Now, it's not the only thing that creates appreciation. However, when you have inflation and your dollar becomes worth less, then property ends up costing more. And this is one of the awesome reasons that I love investing in real estate is if you've got cash and you put it into your real estate, inflation isn't a negative thing to you because your money is safe in real estate. Because if your dollar is becoming worth less, it doesn't matter if that dollar is tied up in real estate because the real estate is becoming worth more. And this is the concept of appreciation. That is that all properties should go up in value every single year. On average, they go up in value between 3 and 5%. Now, that entire amount is not caused by just inflation. Appreciation is the concept that yes, you benefit from inflation, but also just naturally property goes up in value. And this is one of the huge reasons for investing in real estate because you know when you purchase a piece of real estate, if it's bought correctly every single year, it's going to go up in value and it's going to go up in value faster than the rate of inflation. That way, not only do you make up for inflation, but you're also making more money on the top. The other thing that is really cool about appreciation is if you purchase a property with leverage, which means if you use a loan to purchase it. So for example, if you purchase a $100,000 property, you can purchase it with only $25,000 cash and get a loan on $75,000 worth. What this gives you the ability to do is control $100,000 worth of real estate, even though you only have $25,000 worth of cash. And that way, if you have a $100,000 property that is going up in value 3 to 5% every single year, you're gonna take that 3 to 5% return and multiply it by 4 because you only paid for 1/4 of that property. So when you're getting a 3 to 5% appreciation on a property, it's actually more like a 12 to 20% appreciation because you only have 25% of the property covered with your own money. So this is one of the big reasons people invest in real estate, especially if they're using leverage, which I suggest because then you can get a huge return through appreciation. The next way that you end up making money through real estate is through something called cash flow. Now, essentially what cash flow is it's when you go in, you purchase a property, and with that property come expenses. So every month you're gonna have to pay your mortgage. That's if you end up getting a loan on a property, which you definitely should. You're also gonna have to pay expenses, you're gonna have to pay utilities. You've got these myriad of other random things that are going out in expenses. But then you should also rent the property, and every month you've got money coming in. Now, essentially, if you purchase a property properly, you should be getting money back every single month in cash flow. So you've got your expenses going out, you've got rents coming back in, and your rent should be enough to pay your mortgage, to pay all of your expenses, and to have money left over that you get as a return. Now, a lot of people think of this as the main way that you make money through investing in real estate. And it really is pretty simple. And it's probably my favorite way to make money through real estate because you get that check every single month. And so that's the other big way that you make money through investing in real estate is through cash flow, where all of your expenses go out and then your cash flow comes in. Now, the other way that you're gonna make money through real estate is through something called principal paydown. Now, not all real estate investors get principal paydown. You only get principal paydown if you purchased your property with a loan. So like the example before, when you purchase a property with 25% down, so $25,000 on a $100,000 property, that means you borrowed $75,000. And every single month when you pay your mortgage, a portion of your mortgage goes to principal and a portion of your mortgage goes to interest. Now, the interest is just an expense you've lost, but the principal is money that's getting locked up in your property. And it's kind of like having a savings account, but it's also another way that you get a return. Now, when we analyze cash flow, we take the entire mortgage out as an expense, when really you get principal paydown every single month. That is money that is getting locked up in your property as if it's a bank. And so that is another way that you get a return on your money, because if you ever sell that property or refinance, then you can take that money out that you've been consistently paying in the form of principal paydown. So now you've got appreciation, cash flow, principal paydown, and all of these are different ways that you're making a return on your investment every single month. They're all a form of a return. And if you add all of those up, a lot of times on an investment property, you can get as much as a 30, 40, even a 50% return on your initial investment. That would mean that if you purchased a property with $25,000 down and it's that $100,000 property, you could get up to a 40 or 50% return between all of these on that $25,000. And this is why people love investing in real estate. Now, the fourth way that you make money is through tax benefits. And a lot of times people get nervous when you talk about taxes, but taxes with real estate are actually very simple. First off, you need to know that any of those expenses we talked about earlier, you get to write off, so that you're not paying tax on the money you made that then you had to spend on those expenses. That includes your interest and any other expenses to renovating or fixing up or taking care of the property. But on top of that, the government has given you this cool thing called depreciation. Now, what it is you get to take this property and depreciate it over a 27.5-year span. Now, I'm sure a lot of you are saying, well, Chandler, you said property goes up in value, so why is the government letting you say that it's going down in value? And my answer to you is, that's just how it is. The government is incentivizing you to purchase real estate, and it's absolutely awesome. The other thing is you have something called accelerated depreciation or cost segregation. This gives you the ability to speed up that depreciation. So if you need to, you can depreciate the property even faster than that 27.5-year period. Now, you do this by depreciating little things within the property on a faster schedule, like a 3-year schedule or a 5-year schedule. And I'm not going to dive into that, but what you need to take home from this is with depreciation and those expenses, you can usually get it to the point where all of the money that you have made on cash flow, you don't have to pay any tax on. And your appreciation and your principal paydown, since it's locked up in your property, you don't have to pay any tax on that either until you sell the property. And so if you never sell the property, then you're never gonna have to pay those taxes. If you do sell the property, you also have something called a 1031 exchange. Now, don't get stressed out. I'm not gonna dive into that, but that lets you sell the property and move that money into a new property without paying any tax. And so what I'm getting at with this is the tax savings are huge. And that's why this is the fourth way that you make money, because essentially you could go your entire life without ever paying a dime in taxes on your properties, other than property tax, of course. And that is just another expense that you get to use against your income so that you don't have to pay any tax on those returns that you're making from your real estate. Now, I know there are tons of naysayers out there that are telling you don't become a landlord. It's miserable dealing with tenants. It's miserable collecting rent. It's miserable going and unclogging that toilet at 4 a.m. And what I have to say to those people is, first off, who is taking a dump at 4 a.m. All right, that's not something you should have to deal with. But second off, just put all of the right systems in the right place. After years of investing and owning 99 units, I've come to find that you can systemize everything so you don't have to deal with any of that crap. And even after paying the expense of paying a management company, you can still put yourself in a place where you're making a huge return, even with the additional expense, to have someone else take care of all of those issues. So don't let the naysayers get under your skin. However, you should let one thing get under your skin, and that is that if you're worried to invest in real estate, you just need to educate yourself more. As you educate yourself, you can completely eliminate the fear and know that you're purchasing a good property that's going to pay you a good return. If you're just gonna hop onto the internet and buy the first rental property that you see, this could be a very negative thing for you. But if you take the time to research, to understand what the numbers are, to understand how to get a good tenant or how to find a good management company to find a good tenant and run your property for you, I promise you there is nothing that should make you fearful about investing in real estate. Because if you get all of the right systems in place, you've done all of your research properly, then investing in real estate is a passive way to make a consistent high return on your money. So this has been a very brief explanation of investing in real estate, but hopefully you understand that if you go buy a good property, the numbers work, then you can get appreciation, principal paydown, cash flow, and tax benefits, and put yourself in a place where you have a passive investment that's going to consistently pay you a huge return every single month. Now, if you enjoyed this video, again, remember to hit the like button and subscribe to this channel and hit the little bell, because on my channel, I will show you everything that you need to know to start investing in real estate and to be a successful real estate investor. As a matter of fact, if you want everything laid out in a step-by-step process, I actually have a course in the link below that you can purchase on sale right now for $50 off. It's a very cheap course, and it's going to give you everything that you need to scale from no rental properties to over 100 doors of rental real estate. But if you don't want the course, subscribe to the channel, and I'm gonna continue to deliver the information that you need to be able to start investing in real estate. So again, if you like the video, smash the like button and subscribe to the channel, and we'll look forward to seeing you in the future videos where my goal is to help you to build a huge passive income. Thanks guys, have a great day.